Good morning, everyone. Darius Dale here to present our macro minute for Wednesday, February 9th, 2022. Starting with markets, we have stocks up this morning, commodities down, crypto mixed, dollar down, global bond yields down. Big movers, we have the Euro Stock 600 index and Japan's Nikkei 225 index up north of 1% apiece. 10-year bond yield down 4 basis points. That's a net minus 14% move. 10-year Swiss yield down 7 basis points. That's almost a 20% decline. These moves are coming on ECB governing council member Francois Villeroy's comments that the markets may have overdone it with respect to pricing in monetary tightening in the Eurozone. Shifting gears to the macro front, Japan's machine tool orders came in accelerated to 61% year over year in January. That's the highest print we've seen since November. Taking it to the chart here, investors should beware, and this is data going all the way back to, the year I was born, 1987. Good year, terrible year for the stock market, but good year. It's going back to the for a long period of time. You can see Japan's machine tool orders are as good, if not the best, leading indicator for the global industrial cycle, perfectly tracking the OECD Composite Leading Index time series for the global economy like a glove. And what we saw here, as you can see, we bounced to 61% in the month of January. Now, partially as a function of a very easy base effects, the actual underlying data contracted at a 73% annualized pace in January of 21. So you're getting a little bit of flattery there from the base effects. But the key takeaway is that these data lend credence to our view that we're likely to see a multi-month bounce in global high-frequency economic data starting potentially as soon as this month in February. We'll get the February preliminary PMIs in a couple of weeks, and certainly by March, if we're right on this post Omicron bounce dynamic. In terms of recovering from the impact, the peak impact of Omicron, all those case count curves are obviously a delta negative at this point from a global economy perspective. Shifting gears to the probable range setups, still overbought signal in the euro, 10-year bond yield, 10-year Swiss yield, in spite of the recent declines. Oversold signal in the VIX, so be aware of that. S&P 500 broke back up to neutral VAMs from bearish VAMs, so that's positive. That gives it a little bit more skew, more symmetric distribution in its probable range, but still 6.9% downside versus 2.9% upside. WTI crude oil neutral VAMs, minus 7% of downside versus 5% of upside. Bloomberg Dollar Index bullish VAMs, minus 0.1% of downside versus 1.8% of upside. 10-year Treasury yield bullish VAMs, minus 17 basis points of downside versus 13 basis points of upside. Bitcoin bearish VAMs, minus 23% of downside, still probing the upper bound of its probable range. Ethereum bearish VAMs, still 29% of downside, still probing the upper bound of its probable range. And then lastly, gold neutral VAMs, minus 2.5% of downside versus 1.4% of upside. So with that, Darius Dale presenting our macro minute for Wednesday, February 4th, 2022. Best of luck out there, folks.